Thank you for joining us at xm.com for today's market comment by Rafi Boyadjian. I'm Maria Bashardez. Risk sentiment was notably more buoyant on Tuesday as fears about the unfolding situation in Israel and Gaza developing into a wider conflict ebbed somewhat. A rush of diplomacy by global leaders to defuse the crisis appears to have soothed investor nerves for now, easing demand for safe havens such as gold. U.S. President Joe Biden is set to visit Israel on Wednesday in a show of solidarity to the country, while Secretary of State Antony Blinken made his second visit in as many days, underscoring the intense diplomatic efforts to contain the conflict and prevent a humanitarian catastrophe in Gaza. The geopolitical uncertainty couldn't have come at a worse time for equities, which are already grappling with decade-high bond yields. Central banks, led by the Fed, have been flying the higher-for-longer flag in recent months, dashing hopes that interest rates would be slashed soon now that inflation is on its way down. If there is a silver lining from the tensions in the Middle East, it's that the flight to safety boosted sovereign bonds, pushing yields lower. But that trend appears to be reversing as the initial panic subsides and the 10-year U.S. Treasury yield is back in the 4.75% range today. Nevertheless, optimism about the third quarter earnings season is rekindling the bulls after the big Wall Street banks that have reported so far all posted better than expected results. The real test for the markets will come tomorrow when Netflix and Tesla will kick off the tech earnings. Gold remained under pressure for a second day as jitters about the latest violence between Israelis and Palestinians faded, albeit slightly. Precious metal staged a more than 5% rally over the past week before easing to around $1,920. But there seems to be some pushback against a steeper retreat amid the volatile nature of this conflict that's keeping investors on alert. The US dollar is similarly not ready to give up all of its safe haven-led gains and is clawing back some of yesterday's losses. However, the greenback's strength today is mainly built on the ongoing weakness in the euro and pound, with the latter taking a knock from softer than expected wage growth data out of the UK. U.S. retail sales will come under the spotlight later today, as well as speeches from Fed officials. Thanks for watching today's market comment here at xm.com.